Hi, hi, hi! Hi, guys! Welcome to yet another episode of the Rare View podcast. I am your host, Kama Kawaida, Rachel Anita, and today is the day the Lord has made. Let's sing together, class. Today is the day. I don't know why I say that. And today I'm with the phenomenal Linda Makatiani. Please, salimia wasi.
Thank you. Thank you very much, Anita. Hi, everyone. My name is Linda Makatiani. I am very happy to be here today. I am a mother. I am a wealth planner. I am an investing coach. And I'm a financial literacy trainer. So, looking forward to sharing a lot of insights today. Mm-hmm.
Guys, when I told you I'm bringing the professionals, I always tell you, save your money, you do this, mnaona naambia stories za jaba. Today, I have brought a professional. And when I was going through my socials, trying to figure out who is the best person to bring to my podcast, talk about money, then I found this wonderful woman talking about money, talking about investments, talking about families. Like, she was just talking my language, but that's, I was watching, I just couldn't, I was just there, scrolling and scrolling and scrolling. Then I figured out there was something you were talking about, finance for families. Can you tell us a little bit about that?
So, Finance for Families is an organization that I'm very, very passionate about. For me, I started it from based on my experience in corporate. So, as I said, I'm a mother. I am also a wife, and I'm also a daughter. So, I'm blessed enough to have both my parents alive. So I understand it from experience. When you talk about how do you talk about money with your parents, I know I do that. When you talk about how do I talk about money with my spouse, I have to do that. Family budgets, we have to do that.
Yeah.
When you have to talk about money with your children, so I have a 14-year-old, so that's a teenager. I have a 10-year-old preteen. I have a 5-year-old small child. I have nephews who've just started working. So all those different stages, you have to talk to them about money differently. And so I thought to myself, these are conversations we have to have as families. So how do we make them open and honest? And so for me, I am like that bridge that comes, that helps you to build that confidence to start having conversations with your family. So that's how Finance for Families came about. And yes, we are building, we're igniting conversations within families, open, honest conversations about finances.
Wow, wow. What an introduction to that. All right. So, my first question for a start, why is family financial planning critical? Why is this important? Why is it that we have to look at finance as a family?
The power in numbers. I think power in numbers is very important. When you're coming together as a unit, you're coming and you're building shared goals. And as you're building these shared goals, you're motivating one another. We are talking about, so what is it that we want to do together? We want to plan a holiday. Can everyone contribute ideas? We see how long will it take us to pool money together. We are looking at the things, and for me especially, I feel like when you come together as a family and you say this is what we want to work towards, you find even the ones who can't contribute financially, like my 5-year-old can't contribute financially, my 10-year-old, even if they did, it would be like a drop in the ocean. But the fact that you all come together, you'll find everyone is rallying, and that kind of motivates not just the adults who are chipping into this fund, but even the children. They will motivate the parents. They'll look for ways that they can contribute, non-financially, of course, to that. And then for me, I also feel it brings the family closer together, because then we can sit, we start planning. So what do we want to do? How can we go about doing it? We are always saying we want ways to talk more freely with our family members. This is one of the ways, when we sit and we are thinking this is something good we want to do together to bond, then we sit and discuss it. It's a way of just opening those channels of communication. So we start with those simple things, a holiday here, a picnic there, and then now we'll move to the more complex things of, yes, so do we take on debt? Do we take on a mortgage? And all that stuff. And within these conversations that we're having, we also remember that we are building the financial literacy skills of the younger children. So as we are talking, we are sharing experiences. As a mother, I would be sharing what I've done, what are we saving towards. what are we investing? For the ones who can understand, then I'll explain. So what is investing in simple terms for them to be able to understand? And that I am actually just impacting them with financial literacy skills. And these are skills that will never leave them. If we get to realize that. And in that process, we are also creating a legacy, because we are passing on values to our children. Not just financial, yes, to theirs. Well. So it's one of the best forms of creating generational wealth. So wealth is not just the money that you pass, the businesses, the investments. That education is something that no one can take away from them. Very important.
All right, you've mentioned different goals, like you said, a holiday, a picnic here, this and this. So how do we navigate a situation where different people in the family have different financial goals or different financial, they want to spend on different things. So how do we navigate conflicting financial interests?
That often happens, because you have to remember, you are coming together, you're two very different people. Of course, when you get married, you're always told you're an individual, you're coming from your home, you have a different set of values that you've been brought up with. This other person has been brought up with a different set of values. So when you're coming together, it takes time. So one is you have to practice a lot of patience and a lot of talking. So one, you realize, you appreciate the fact that we are all coming from different setups. So I believe my mindset is the right mindset. My spending habits are okay. I don't need to change them. And he also believes the same thing. But it's coming together and seeing, so can we come together and create one, just to start with, a common ground? Because in all these differences, we can always find that common thing that we want to do. So yes, we want to have dividend memories for our families. That's something common. We want to be able to, yes, get those children, do family holidays. We will start from there. Then from there, now we work on, so what will be our non-negotiables? Those are the things we say for our family. This is what we will not negotiate on. We will save, we will spend on this guilt-free. But for us to be able to do it guilt-free, then that means we have to save, we have to invest for whatever it is. And then when you move from that, it's just being honest. And I think sometimes some of these conflicts come because we are not being honest about our financial circumstances. So we can be married, I could be having problems at work. Yes, and I'm not mentioning at home. So when we are sitting there and you're trying to talk about, let's discuss this holiday that we want to take, or this new car, family car that we want to buy, I will be totally against it. Not because I don't think it's important, but because where I'm sitting, there's something that is happening in the background that I'm not feeling confident enough to talk about. So we need to be able to now just have those honest conversations and say, okay, fine, I see the importance of this, but for me, I don't think it's good for us right now, because 1 and 2 or 3 things are happening to me. Then you're able, but start from a common ground. It's with the families I deal with, it's a lot. You like, oh, no, he doesn't respect my decisions. He doesn't listen to me. But it's now trying to get to the root of it, and then say from there, what common ground can we start from? So then that creates the foundation to the conversations that we are having. But patience, a lot of patience.
A lot of patience. That's the key word. Patience.
Yes, a lot of patience. And don't give up on your spouse. I would tell you, I would give you an example. For me, being in the investment space, when we had our first child, I was like, my child needs, I want to be able to start saving for them from
oh boy, that sounds like me.
So immediately I got their birth certificate. I went, I opened a bank account, and my husband was like, child can hardly even eat by themselves. Why would they need an? I was like, no. Got a piggy bank, started putting in small coins. And as I grew older, then I got them now to do that. So he never, he was like, okay, it's fine, I see, but he didn't see the relevance of it at that particular point in time. But then now later on, when we had built on the savings, and then I opened a stock brokerage account, I started now buying stocks on behalf of now my child, a joint account. And then we started getting dividend checks. Okay, very small amounts, because we were not investing that much. But now he got interested, and he was like, my child is like 3 years and they are making money, so it takes time. So be patient, work. I always say, try and do what you can be able to do. And then your partner will always come around when they start seeing the benefits streaming in.
No, I can totally relate to that story. I can totally. Really. Now,
Yeah.
this brings me to my next question. How do you handle situations where one family member is not financially disciplined? Like, for instance, you said we are doing this one goal.
Yes.
Let's say we are saving for a trip. Everyone has chipped in. But
Oh.
there's just that one person you have to call 20 times. And at the end of the day, they will not chip in. And at the end of the day, you just have to carry them because it's family. You know, we do things as a family. So,
We have to have lessons. We need to get people to understand.
Mhm.
And first, I think for me, what is most important again is to find out what's going on in their lives.
okay.
Because they could be not chipping in because there's something that is going on in the background. So once you establish that there's really nothing that is financially holding them back from chipping in, maybe they're just used to, oh, I know they will carry me.
Yeah,
You
that
know,
one,
they'll take me if I
it's
don't.
such a sad.
Sometimes some of the lessons have to be harsh. So you have to get
To
to
your
a
family.
situation.
To your family.
Yes, because we would never, I don't feel like someone would ever learn if we keep carrying them along like that. So it will always be, they will do it. So why? And that's why we always have this like a harambe mentality. I don't need to save, I don't need to invest because I know if anything happens, my family will come through for me. But you cannot depend on that because then you don't know at that particular point in time, these family members that you're depending on, what are they going through in their own individual lives? So they might want to come through for you, but they can't be able to do that. So I think
you need to say that again.
Yes, they might want to come through for you, but they might not just be able to do that. Yeah. But if it gets to the point where you feel like they're taking advantage, again, you can always seek professional help. Get someone who'd be able to sit with them because it might not be an income problem, but it can be a money management problem. So they just don't know how to be able to prioritize and put their finances in order. So it might be good to seek now professional advice. Call me. I'd be able to sit down and just talk to them and find what is the issue, and then from there we can be able to create a collaborative unit. So that when everyone is going, everyone is enjoying guilt-free. You don't want to go and you're looking at them like, if they cough like this, you're like, and you didn't even pay for this, you know.
It creates there's like a feeling of this person didn't pay.
So yes,
and then those people don't have shame.
They'll come, they'll order all those things, but you want to have a holiday where, as a family, if you are out here, we are all taking this deserved break to enjoy 100% enjoying, not looking at people and thinking, you wait till we get back, we'll have this discussion. Yeah, so sometimes it's good to have those discussions, be open about it, and sometimes don't keep it to yourself. Just find ways of being able to talk about it. I always say, if it's like a sibling thing, there's always that one sibling who I don't say everyone fears, but everyone respects in a way that if they approach you and they tell you this is not right, what you're doing, now we need you to be able to do 1, 2, 3 to contribute to this kitty because we are all contributing as a family, and that's it. Then they would be able to do it. But approach that sibling. If you're lucky enough to be many, there's that one sibling that everyone can approach to go and talk to the one who doesn't want to.
I feel like I'm that sibling, but it's overbearing on behalf of other siblings, firstborns especially.
Yes, I know.
It's please just behave yourselves, guys. Behave yourself.
Yeah, but at the end of it, we want to be able to enjoy the holiday. We want to be able to enjoy it, come together as a family and enjoy. So yes, just take it on, talk to them, and so that you also don't feel like you're there and you're shooting, dagger eyes at them instead of fully enjoying and being present during that space.
All right. All right, Linda. So, what are some of the wise investments that families can invest in, despite their earning capability or how many they are? What can families do about this financial planning?
I like that one. First, it's to be able to know the difference between saving and investing. So if you're saving as a family, that means you're coming together to put money aside. We hear a lot about emergency funds. So as a family, you need to have an emergency fund. This is basically where you're saying, as the mother, as the father, we have children who are depending on us. So if at any one point, maybe we lose our job or one of us gets sick, we need to be able to have some money put aside to be able to cater for that emergency. Then we also have where we were talking about, saving for a holiday, or maybe even your child's education, a trip they want to take, and all that. So that is a planned expense. So this is something that is coming. It could even be we want to have another child. So we want to start putting money aside for that whole, because it's an expensive. So you put money aside for that one. So that is saving. For families, saving does not require a lot. You come together for me, like with my children also save. Even my 5-year-old is saving.
What? 5-year-old?
Yes, he's saving. So, and this is how I do it. We have, I open an account for each of them. An account is 1,000 shillings. For most of the bank accounts, they'll give you a piggy bank that the child can use. So you go, you explain. A 4-year-old, a 5-year-old, they can understand what that means. So anytime they do something good, you would give them 5 shillings, 10 shillings. For a child, even that 5 bob is a lot of money. Yeah. It will take time for that piggy bank to fill. Carry that piggy bank, go with them to the bank. They will open it, they'll count that money, put it aside. So even as a child grows, they end up. I've done that with all my 3 children. So my 10-year-old, she counts the money in her piggy bank. So we'll take it to the bank together. She'll open, she will count, it will be deposited in the account. My 14-year-old, her now, we take it a notch higher. She manages her money. She'll budget. She says, this is what I want to do. This is my target amount for this. And then she'll look for work from me, from her dad, to be able to get some money. So that's how now families can be able to save. When it comes to investment, so saving is, we're looking for money to pool for a future emergency, like an immediate future. Investments is where we are looking, how do we put this money so that it can grow? So we're putting this money away and we're looking at a long-term view. So again, you can be able to do that. So the children can't do it independently, but you can do it with your children as a joint. So I open the easiest one. You have like a stocks brokerage account. So this one is where you would start buying stocks. You would open an account. It's a joint account, me as an adult with my child. Then for as little as 2,000, 3,000 shillings, you start investing. And this is why I tell people, because this child is 5 years, 10 years, even if I do 2,000 here, I don't have to do it every month, depending on how our family budget is. I will buy 500 shares. Next time I get some money, I buy some 500 shares more. By the time this child is able to look at that portfolio and understand what these stocks are, I would have gotten to 5,000-10,000 shillings. And how stocks work is you'll buy those stocks. You're buying shares into a company. So as this company is growing, your child is growing. But as the company is growing, they're saying thank you for giving us money to be able to grow. So they pay you periodic. So you'd get maybe once a year or twice a year, they would pay you dividends. So this does not affect the money that you've put, the stocks that you've bought. So you get dividends against the number of shares that you have. So if I have 1,000 shares and the company that I've invested in decides to give 1 shilling for every share that I have invested for myself and my child, then we will get 1,000. So, I get, what is that, 10,000? I get, yes, 1,000 shillings. Yeah, it's very small. Someone may say it's very small, but remember, that's when the child is 5. So they grow, by the time they are 10, I have 10,000 shares. If they give me 2 shillings for every share, I have 20,000 shillings that goes into this. So that's one way that you can be able now to just get. And then they get to the point where now you can start involving them. So, like with my 14-year-old, I talk to her now about the shares that are in her portfolio. So I'm like, when we go to, I'm biased, so I bank with ABSA. So I'm like, so when we go to ABSA Bank and we are banking there, then these shares, it means we own a part of this bank, So they start to familiarize themselves with that. So every time they see, they're like, oh, mommy, so that is the bank that we have. I'm like, yes, we have shares. We have shares in that bank. Yes, part of that bank. Wow. So, and she sees that every time we get dividends, I will show her like, okay, so this is what they're paying. This is how much we have in your account currently. And so she's getting to the point where she's like, can we start buying the designer? Ooh. I'm like, okay, now we will move to those ones when you're older. When you're older. Yeah. But that's one of the ways. So you can open a stocks brokerage account and you're able to invest for yourself as an adult. and
So you're
also as
telling me
joint.
this is something even a mama mboga can do?
Yes, because there's no minimum amount. The minimum amount is based on the shares that you want to buy, which company are you buying, and what's the price per share for that company stock. So if the company stock is 1 shilling and the minimum is 100 shares, for if you have 110 shillings, adding the commission that you need to pay for that trade, for 110, you can start investing.
Wow.
You get 500, go buy
Wow.
400 shares. Next time you get 600, buy another 600 shares, and then you keep building it like that. The people like Warren Buffett, that is how they've managed to grow their portfolio to the point where even just here at home, you read papers and you see someone's made, they're getting a dividend check for 1 million shillings. They are like 65, 70. This is not someone who started the other day. This is someone who started in their 20s as they started working. So for me, I really encourage that. And even as parents, when you're doing this, don't do it for your child, do it with your child. Yes, so they can be able to understand. So that's when you're investing, you have the stock brokerage option. Then you have where now you can start buying bonds, but this is now for the adults, where you put money aside, pull it in a savings. So me, I call it like an investment fund. So you open a different investment fund, you pull money. When it gets to a sizable amount, then now you can go and you buy a bond. So how a bond works, you go in, you're lending money to the government. The government is promising to pay you this amount every year. They do that twice a year. So they'll pay you half after every 6 months and the other half after 6 months. And this is income, passive income. You are not going and struggling anywhere to buy. You have made that investment. When that income comes, now again, you have to sit and think, so what am I going to do with this interest that I've gotten here? So you don't go and spend all of it. You can spend a bit to thank yourself for being disciplined and all that, but reinvest so that now even that money that has made you money goes and makes you more money. Yeah, that is how. So those are very simple steps that as families. But again, I say you do it together. So something like a bond, you can open a joint account with your husband. And these accounts are free, by the way. Let me just say that. The account opening is free. No one will charge you to open a stock brokerage account. It's free. No one will charge you. Central Bank will not charge you to open a CSD account at Central Bank. It is free. So you open, all you need to do is provide, know your customer documentation, your ID, your KRA PIN, your bank account details, so that when they're paying this interest, it goes directly into your bank account.
When people talk about such things, the bonds and all that, I usually feel like you need a person.
No.
To when like to the bank, you need a person.
And
so
now
this is something I can
everything is
wake up
online.
and just
Let
do
me tell
it by
you,
myself.
you do it by yourself. You actually do it at the comfort of your home, wherever you are. Because the account opening process is automated. You sit, log on to the DoCSD portal, open, you have all your documentation in soft, open that account. They will verify your account details with your bank. This is her account, yes. So that now they don't pay money to the wrong account. That's it. You've pulled your money together. When you're bidding for it, you go, you online, say, I would want to buy a bond. This is how much I want to invest in the bond. Online. No walking to, when you're opening a stock brokerage account, same. Go online, open the account. When the account is open, fund. If I have 2,000, put that 2,000. You have 5,000, put that 5,000. And now you can even do that whole process of buying shares by yourself. You don't have to call the broker. Buy for me ABSA, buy for me KCB, buy for me Safaricom shares. You do it by yourself. It's a very easy process.
If these things are this easy, why are they not like in the open? Because you think about, like, even me myself, I'm actually ashamed that I'm learning, but there's no shame in learning anyway.
There's no shame in learning, yes.
Because I think about it, then I'm like, because I used to have a financial advisor, and I'd be like, let me open for you. I'm like, Kwani, this thing is supposed to be this difficult. No. You need to go through someone. And now it starts looking fishy.
Yeah. You're like, yes, because then you're giving too much information or too much authority to someone else to handle
over your
money.
Finances.
Yes. Yeah. No. Wow. We learn. The only bit where you'd say now you'd reach out to the professionals is like if you're buying stocks, you would want to know, how is this company performing? What are their prospects? So then they have have analysts in-house who now will go and sit down with the companies to find out, so what are your strategy, what's your strategy? And then now from there, they will do like a growth projection and see, so this company, we are seeing it growing like this, or maybe this company has stagnated. So now you use that information to make an informed decision whether you want to invest in that company or invest in a different company. That's where now you would go to your broker to be able to, but now even that is online, because most brokers are even online, most financial advisors are online. Yes, you can be able to get all this information. So just seek, and that's why for me I say part of financial literacy is to challenge yourself every other time. What can I do to be able to learn something new? You've learned something new today.
Yeah.
Are you listening to podcasts? Are you watching webinars? So when you get curious about something, don't just say, oh, maybe that one is just for the rich people. No, go out. No, go out. Listen to podcasts.
Yeah.
Well, okay, what is it about? Watch webinars, read. Look for these people and talk to them and see, so I can actually open one, it's free and all that stuff. That is how we improve our financial literacy skills.
Wow.
Yeah.
This is bringing me to the money mindsets we have in Kenya.
Oh, yes.
What do you think are the most common, very bad money mindsets we have in Kenya, and how this affects us generally?
That one of, and this is very common, saving and investing is for the rich. Yeah. That one, it's only the rich people, yes. And now, the way we just said, account opening is free. You don't need to have tens of thousands to invest in all these things. You can start small with whatever you have. There's a bit for, why should I'm putting my money there? What happens if that company fails?
That one.
So I'm not going, why should I even start? Why should I even start? Let me not put my money out.
That one, I have a question. Because you remember there was this time almost 3 banks collapsed at the same time. Now, how do we fix that, honestly? Because for me, before I open a bank account, I have to look how many years
has this been in operation?
If it's a new business, I'm like, guys, no. Yeah, we've seen these banks collapsing, investing, whatever things collapsing. How do we regain our confidence in such institutions where they keep on collapsing?
For me, I always say the first thing is investor education. Even you as an investor, the way you said, take time and understand. Respect your money. Before you put your money somewhere, find out, so how stable is this institution that I'm going to put my money in? And then what do I do in case I feel like they're not handling my money well? What is the procedure? What's the complaint procedure? What's the compensation procedure? And then you're able to follow through. And I'll tell you, I know you've seen a lot of them collapsing, but even as I'm putting my money in my bank, I need to understand if anything was to happen to this bank. Because remember, these institutions are being managed by human beings. True. Before I put my money in this, what is the maximum amount they can compensate me in case anything happened to this institution? So that becomes part of your risk management for the money that I'm putting out here. So this is for my bank. When it comes to savings, I'm going to save in a money market fund. So I have to look at, is this fund regulated by the Capital Markets Authority? If it's regulated, this product that I'm putting my money in, is it a regulated product? Because what we're seeing is we have fund managers who would have regulated products and unregulated products. Now, if you are not aware, you would now look at, as an investor, you're looking at the returns. So you see, this investment will give me a 20% return. What you need to know is that high return, while the market maybe is giving you 15%, 14%. So your concentration is, let me put my money here because I'm going to get 20%. I'm going to get 22%. But you have to remember, the higher the risk is, the higher the return. So they are compensating that return they're giving you because they know you're taking on a lot of risk. So when you know that, then that you have to sit back before you put your money and ask yourself, so what is this risk that I have to pay for me to be able to get that 22% return? Is it because this product is unregulated? Meaning, if the underlying asset that I'm investing in does not make money, then that means all my money disappears. I don't have any channel where I can go and start complaining and saying, okay, so my money has been mismanaged. Can I get some compensation for it?
Do we really? Is this like in the thin line that we never read? We're always
No,
given documents that
but
like sign here. We are
yes,
just signing.
because
We never
as
read
an
through.
institution, you are trying to close a sale. So,
Yeah.
and this is why, like I say, investor education is very, very important. So that
Wow.
even me, when I'm going there to put my money, to invest my money here, I know the like 5 or 6 questions I need to ask before I put my money there. So I'm going to ask, yes, okay, you are regulated by who? Fine. You are licensed? Yes, yes. These products you're offering, these are the returns. I can compare those returns with what is in the market. So as an investor, so I should not really rely on the institution to provide me this information. Because remember, they're in the business of making money.
Yeah.
They want to make money from you. So they will assume that you have done your due diligence on your end. So
You've
it's
done your
investor
research
education
and
is
you're
very,
okay
very
with whatever
important.
they're offering to
Yeah,
you.
yes. So
Wow.
please, before you invest in anything, mine is always, and I always say, respect your money. When you respect your money, you don't just put it anywhere.
Yeah.
You do proper due diligence, proper research, then you put your money there.
Wow. So this is very personal.
Hmm?
Respect your money. Be very. Hey, me only say
Do
don't joke with my money.
proper, yes,
So yeah.
yes, respect your money. When you respect your money, by the way, you'll find yourself, before you part with your money for any investment, any to buy any asset, you have taken time to understand this is the risk and I'm willing to take on that risk.
Wow.
So don't do it. And the other thing is, I always see people doing because my friends
It's
done it,
doing
or my
it.
family member, know them,
Yeah.
or maybe they're also part of that institution. We all have different risk tolerances. The risk, the loss that you can stomach is not the
The
same
loss
loss
I
I can
can-
stomach,
That's a good one. The loss.
Yeah,
Oh,
it's not the
wow.
same. So someone can tell you, I'm making a lot of money, but they're not telling you, in between making that money, they lost nearly half of that investment, but they were okay because
Yeah.
them, they were willing to wait to make that money. You get into that investment, you lose even 10% and you can't sleep. So you have to understand, we are all different. We all have different risk tolerances. Please get to understand your own, we call it an investor profile. You understand your own investor profile. How much loss am I willing to stomach in case it happens? How long am I willing to put this money in this investment? What are my goals? What do I want to get out of this investment? And that one is usually very, very personal.
Wow. Wow.
Hmm?
Wow. Now, as we are doing all this, how can you take a typical Kenyan from the scarcity mentality to an abundance mentality? How can you tell the normal Kenyan that you can do this?
Wow. One is to find ways to make them realize, to be aware of it. You know the way they say you cannot solve a problem unless you accept you have a problem. So first you have to accept that I have this scarcity mentality, this negative money mindset is affecting my relationship with my money,
Typical
my relationship
Kenyan.
with, yes.
To accept.
So now and that's what I'm saying, you have to get them now to accept to that. And sometimes it's example, share. And that's why for me, I'm very passionate about telling people, please be open. I don't have to tell you exactly what is on my payslip, how much money I'm making, but let's start having these financial conversations. Because when we're having these conversations, someone might be listening and, you tell them where you've come from, where, I never really used to think I would be able to make money or to look at other options of, to be able to increase my income. But I did this, I did 1, I did 2, I did 3. Now at least I have this other source of income. I'm able to take that money and invest. So when you share such, it's able to draw someone out and say, you mean even me, I can be able to make a change. So having those conversations is very important. You never know what someone is going through. They might not be sharing with you, but you sharing your story with your family, even just within your family, with your colleagues and all. So it's very good. And that's, like for podcasts like this, someone will see and say, so actually, I can, yes, it's possible. I can move. I can start investing. I can start saving. I don't have to have that much money. Because there are people who they sit back and they say, why bother? Because I don't even have like a stable source of income. So that one is only for the people who are working. They have salaries. Me, who's doing gigs here and there, I can't be able to do that. No.
But I've come to realize when it comes to money, it's such a touchy. I don't know if it's just in the Kenyan space, but when you talk about, people think you have money. Like the moment you bring that conversation, even if it's with your siblings or someone, they immediately think
You're
have
confident
money.
to talk about money because you have
You have
money.
it. So that's a mindset I wish we could change. I wish people would understand. You can just talk. You can just ask,
Yes.
by the way,
Yeah.
how do you, and again, Kenyans don't like sharing how they
How they,
how
yes,
they make money
most would
and how
not.
they moved from like that situation to another.
But for me, like, that's how, as part of Finance for Families, what I do is I go and I sit in with families, because sometimes you're together, you want to talk about money. It's important for us to talk, but who's going to start that conversation?
Yeah.
You're all looking at one another. I don't want to be the one to bring it up.
Yes.
So me, I will come, come on. If it's tea, I will drink that tea,
Yeah.
and I will start that conversation. We can start it as basic as budgeting. Yeah. What challenges here, I will share my story. And from there, you get people now starting to open up. But we have to have those conversations.
Yeah.
It's very important.
I agree. And I'm truly grateful to have
Oh,
had you on
thank
this
you.
show, for
Thank you
coming
so
and for
much.
sharing. Guys, today sinimelan. Mi ndo nakuanga hapa telling you guys, la, 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 la. Today, I have learned. I have been taught. I'm so grateful. Thank you for sharing this immense knowledge with us. So guys, if you want to learn more about family,
yes,
I keep
Finance for Families,
saying family planning,
family financial planning.
Yes, please check out her podcast. It's on Instagram. Follow her. She gives amazing content.
Yeah.
So thank you guys so much for being on our show today, for listening, for sharing, for commenting, for liking, because I believe by the end of this episode you've done all those things. So thank you, and keep it locked. Thank you.
Yes.